All right, get ready, because today we're taking a deep dive into AAVAS Financiers, LTD's Q2 FY25 results.
Ooh, exciting.
Yeah, got a lot to go through here. We've got the official press release, of course. We've got the detailed financial statements.
Yeah, even the investor presentation.
Yeah, even the investor presentation. So we've got a lot to unpack here.
Looking forward to it.
Yeah, so I think our mission today is to go beyond just the numbers and see what story this tells about AAVAS's performance
Yeah.
and their strategy
Yeah.
in this really hot Indian housing finance market.
And it's a market worth watching,
Us, yeah.
especially when you're talking about a company like AAVAS who focus on affordable housing finance.
Right.
So as we go through these documents, just remember, the backdrop of all of this is the Indian economic growth
Right.
and the demand for affordable homes. That's a huge part of how we're going to be interpreting this.
Yeah, absolutely. And so let's just hit the headlines first.
Yeah.
AAVAS held their board meeting on November 7th, 2024 to approve these results. And they're really touting this 20% year-on-year jump in assets under management.
Wow.
Yeah, that's AUM for all you finance folks out there.
Right.
Basically the total value of all the loans and assets they manage.
Makes sense.
Plus their profit after tax, or PAT, is up 18% compared to last year.
Pretty impressive.
Yeah, I mean, that's really strong. It kind of puts them in a pretty good position.
It certainly does put them in a strong position, but, growth is not the only thing we look at.
Right, of course not.
We also see a slight rise in the gross stage 3 loans.
Okay.
Just a little nudge from 1.04% to 1.08%, meaning a slightly larger portion of their loans are considered a higher risk of default.
Okay.
Not a huge jump,
Yeah.
but it's something to note and keep an eye on as we go forward.
For sure, for sure. So growth is good, but risk is something we got to keep in mind.
Always.
Now let's get into some of the details here. Looking at their loan growth disbursements are up a healthy 8% year on year. So clearly, there's still a lot of demand out there for what AAVS is offering.
Yeah.
But there's also a shift happening.
That's right. There's more of an emphasis on home loans and a little less on MSME loans.
Okay.
Remember, those are loans to small and medium businesses. The mix has shifted from about 66.9% home loans in the first half of FY24 to 65.6% now, with MSME loans rising from 10.5% to 11.4%.
So do you think this means they're deliberately kind of shifting more toward these home loans?
It really does make you wonder if they're doubling down on their core strength, which is those affordable home loans.
Right.
And if they're trying to, capitalize on the booming housing market in India.
Yeah, trying to, solidify their place as a leader in that market.
Exactly. And that makes a lot of sense when you connect it back to the bigger picture, right?
Yeah.
India's affordable housing market is expected to grow rapidly.
Yeah.
And, having that core strength would allow them to kind of really solidify their position as a market leader.
Yeah, for sure. So with those loan figures in mind, how is this translating into their financial performance?
Good question.
Their revenue is up a solid 12% year on year.
Okay.
And that total income's getting a boost from both interest income, meaning what they earn on their loans,
right,
and gains on loan assignments.
Uh-huh.
And there's always a but.
There's always a but.
When it comes to finance, those finance costs are also creeping up.
Right. And, those rising finance costs are going to put pressure on that net interest margin.
Yeah.
That's the NAM basically tells you how profitable that lending activity really is.
Right.
And it's actually shrunk a bit, down 39 basis points year on year.
Oh, wow.
So this raises a really important question.
What's that?
Are rising interest rates a trend that we're going to see continuing to affect them,
right,
and maybe even the entire financial sector in India in future quarters?
Yeah, that's a good question, especially given that rising interest rates are kind of a global thing these days.
Definitely a global phenomenon.
All right, so let's move on to asset quality, a crucial factor for any financial institution.
Absolutely.
We already mentioned that slight increase in gross stage 3 loans.
Right.
Still pretty remarkably low compared to industry averages.
Yeah.
But, what are they doing to manage that risk?
Well, the provision coverage ratio sits at 59.11%, which tells us they're prepared for some potential credit losses. That's essentially how much money they've set aside to cover potential loan defaults.
Right.
But it does make you think, how might India's overall economic conditions, you know, which can be a little unpredictable, affect AAVAS's asset quality in the future?
Yeah, that's true, because a healthy economy usually means fewer people are defaulting on their loans.
Exactly.
So lots to think about there. But shifting gears a little bit, AVACS overall seems to be in a pretty solid position, wouldn't you say?
I would agree with that. Their capital adequacy ratio, or surely are, is a very healthy 46.48%.
Wow, that's high.
Yeah, meaning they have a good cushion to absorb any potential losses. And they have a diversified funding mix.
Okay.
As of September 2024, 50.8% of their funding comes from term loans, 25.1% from assignments and co-lending, 18.1% from NHB refinancing, and just 6% from NCDs.
Okay.
And here's the interesting part.
Okay.
They're not relying on commercial papers at all,
Really?
which to me signals prudent risk management in this current market environment.
Yeah.
It suggests that they're focused on, stable
Good.
long-term funding sources rather than, these short-term, potentially more volatile options.
Makes sense, especially with those rising interest rates we were just talking about.
Exactly.
And, they just secured a 6.3 billion
That's right.
rupee NCD issuance from IFC.
Huge.
Yeah, I mean, clearly investors have faith in their future prospects.
It seems like it.
Plus, let's not forget the tech angle.
Oh, yeah, the tech is important.
AAVS is going all in on this digital transformation.
It seems like everyone is these days.
Yeah, they're even rolling out a brand new loan origination system,
Wow.
LOS.
Very cool.
Yeah.
So it seems like, they're really aggressively pushing toward digitization.
Yeah.
Suggests that they see technology as a key way to be different in the market.
Right.
Allows them to reach more customers and operate more efficiently.
Right.
Smart move, considering how quickly fintech is growing in India.
Yeah, absolutely.
Yeah.
And it's not just, throwing money at the problem either.
Mm-hmm.
They're implementing this new loan management system for scalability. They've got a cloud-based ERP system to automate their back office, and they're building out data analytics capabilities.
Wow. So they can get a 360-degree view
Yeah.
of their operations and customer interactions.
It sounds like they're really tech-savvy.
Yeah.
They're financially sound, and they're growing really rapidly.
It seems like they have it all.
But what about their impact beyond just, the balance sheet?
Yeah, good question.
Well, their investor presentation highlights their commitment to ESG.
Right. Environmental, social, and governance.
Yeah, exactly.
And it's interesting because they're not just treating it as like a separate thing.
Yeah.
They're weaving it into how they do business.
Yeah.
From lending practices to community engagement.
Right.
So, for example, their Gram City program has empowered over 118,800 rural women through skill-based training.
Wow.
And their Vishwakarma initiative has helped over 64,800 construction workers,
That's great.
enhancing their skills and safety knowledge.
So they're not just talking the talk.
You're right.
They're actually walking the walk.
Exactly. And it's not just altruism.
Yeah.
There's a smart business angle to this.
Yeah.
By empowering these communities, you're cultivating a bigger customer base and helping the affordable housing sector grow overall.
Yeah, it's a win-win.
Exactly.
Yeah.
And their ESG rating from Morningstar Sustainalytics has gotten better.
Oh, wow.
It went from 26.16 to 23.94.
So that means,
Lower ESG risk rating is better.
oh, okay, lower is better.
Yeah, so they're on the right track.
Got it. Got it. So it sounds like they've got a lot going for them.
Yeah, they do.
But I'm really interested to delve deeper into this investor presentation and see what their plans are for really becoming a major player in the Indian housing finance market.
Yeah, let's take a look. Okay, so let's open up this investor presentation and see how AAVAS is, laying out their strategy for the future.
Yeah.
They're definitely painting a picture of confidence here.
Right.
Highlighting this huge potential in India's affordable housing market.
Yeah.
And it's a market driven by some really powerful forces, right? Rising incomes, rapid urbanization,
Yeah.
and government support that's encouraging home ownership.
Yeah, for sure. But they've got to back it up with action, right? I
Exactly.
mean, it can't just be talk.
It's all about execution.
Yeah, they have to deliver.
And they have been delivering impressive growth.
Yeah.
Their AUM, remember, that's assets under management, has been growing at a compounded annual growth rate of 27% since 2018.
Wow.
That's not just keeping pace with the market.
Right.
That's outperforming it.
It's huge. And their disbursement growth tells a similar story,
Yeah.
a KGR of 18% over that same period. So they're reaching more and more customers, especially in those underserved rural areas,
Yeah.
which aligns perfectly with, their focus on affordable housing.
It does. And, when you look at the average loan size,
Yeah.
which was around 0.94 million rupees as of September 2024,
Right.
it really highlights, that commitment to affordability.
Yeah, these aren't, luxury villas.
Right. These are loans that are helping make home ownership a reality
Right.
for, a big chunk of the Indian population.
So how about their strategic approach? What are they doing to make sure they're positioned well in the market?
Well, they're really emphasizing a balanced and
Yeah.
diversified portfolio.
Yeah.
A good example of this is their loan book breakdown.
Right.
70% home loans,
Mm.
18% secured MSME loans, and 12% other mortgage loans.
That's a pretty good mix.
Yeah, that diversification really helps them spread risk and make sure they're not too reliant on any one sector of the economy.
Right. So they're not putting all their eggs in one basket.
Exactly.
And they seem to be just as savvy on the funding side.
Oh, absolutely.
We talked about it a little bit earlier, but it's worth, bringing up again.
Yeah.
Their funding mix as of September 2024
Okay.
is really diverse. 50.8% comes from term loans,
Okay.
25.1% from assignments and co-lending,
Right.
18.1% from NHB refinancing, and just a tiny 6% from NCDs.
Yeah, they've built a really strong and sustainable funding model.
Yeah, it seems like it.
They're relying on long-term funding sources and partnerships
Right.
instead of chasing, those short-term gains.
Right.
And that gives them stability and
Yeah.
ability to deal with market changes.
Which is really important right now.
Which is incredibly valuable in this kind of, uncertain economic climate.
Yeah, and we can't forget that NCD issuance of 6.3 billion rupees from IFC.
Oh, yeah, we talked about that in the first part.
Right. It's not just money.
It's a big vote of
It's
confidence
a huge vote of confidence.
from a major international investor.
Yeah, for sure.
That kind of endorsement, says a lot about AAVA's credibility and their potential for the future.
Yeah.
It also gives them the financial resources to keep pursuing their, ambitious growth strategy.
Right, because they definitely have some big goals.
They do.
So let's
Yeah.
get back to technology.
Yeah.
It's been a theme throughout this whole deep dive.
Right. It keeps popping up.
AAVS isn't just like dipping their toes in the digital pool.
Right.
They're doing a cannonball right into it.
They're going all in.
Yeah, and their investor presentation lays out a pretty bold digital transformation plan.
It does. And it's not just about, throwing technology at every problem.
Right.
They're being strategic about it,
Right.
focusing on things like customer experience,
Yeah.
scalability, speed efficiency, and improving those internal controls.
Right.
Remember that new loan origination system we talked about, the LOS?
Right.
They've already seen a 50% reduction
Wow.
in the time it takes to go from, customer login to making a loan decision.
That's huge.
It's a win for AAVAS and for their customers.
For sure.
Customers are getting a faster, smoother experience.
Right. It's more efficient for everybody.
Exactly. And they're not stopping there.
What else are they doing?
They're implementing a new loan management system to handle that growing volume of loans.
Oh.
They're using a cloud-based ERP system
Yeah.
to automate their back office stuff.
Right.
And they're building out their data analytics capabilities
Okay.
so they can get that 360-degree view of their business.
Yeah, like we were saying before.
It's like they're building this digital fortress to support their future growth.
Yeah, and make sure they're ready for anything.
Exactly.
It's really impressive. But we have to remember that technology is just a tool, right?
It is just a tool.
The real value comes from how you use it.
That's the key.
And in AAVA's case, they're using it to make things better for customers, to manage risk better,
Yeah.
and to make their operations excellent.
It's a smart approach, and it really sets them apart in a market that's quickly becoming digital.
Yeah, it really does.
Now let's switch gears a bit
Okay.
and talk about something we haven't really touched on yet. Environmental, social, and governance, or ESG.
Yeah.
AAVAS is making this a core part of who they are.
Okay.
And their investor presentation spends a good amount of time talking about their efforts in this area.
Right, and it's not just about checking boxes or following the latest trends.
No, it's more than that.
They're really integrating it into how they do business
Yeah.
from their lending practices,
Right.
which prioritize financial inclusion
Mm-hmm.
to their community engagement initiatives like the
Yeah.
Graham CD and the Visual Karma programs we discussed.
Exactly.
It's about making sure their business goals are in line with positive social impact
Yeah.
by empowering women in rural communities and making things better for construction workers.
Yeah.
They're not just doing good. They're also building a more sustainable and inclusive housing ecosystem.
And that ultimately benefits their business in the long run.
Exactly. It all comes back around.
It's a win-win for everyone.
And the market is definitely noticing.
Their ESG rating from Morningstar Sustainalytics has improved.
Okay.
It went from 26.16 to 23.94.
So that's good, right?
Yeah, remember, a lower score is actually better in this case.
Oh, okay. Lower risk.
Yeah, it means lower ESG risk.
So they're doing well on that front.
Yeah, it's a good sign that they're taking ESG seriously
Yeah.
and that they're making real progress.
All right, so we've talked about a lot.
We have.
Their financial performance, their strategic moves,
Right.
their tech adoption, and their commitment to ESG.
Seems like they've got a lot of momentum.
Yeah, they do.
But, there's always a but.
There's always a but.
The Indian financial landscape is really complex and competitive.
Right.
There are big banks,
Uh-huh.
other housing finance companies, and
Yeah.
even, those quick fintech startups.
Yeah.
Yeah, everybody's trying to get a piece of the pie.
Everyone wants a slice.
So I guess the question is,
Yeah.
do they have what it takes to not just survive,
Right.
but to actually thrive in this really challenging environment?
So that's what we need to figure out.
All right, so here we are, the final part of our AAVA's deep dive.
Yeah.
We've seen their impressive numbers, their strategic moves, all this tech stuff, and even their commitment to ESG.
Yeah. We've covered a lot of ground.
But the big question is still out there, Can they actually become like a major force in India's affordable housing finance market?
Right. Can they really make a dent?
Yeah.
The potential is there, for sure. I mean,
Right.
India's affordable housing market is huge,
Yeah.
and it's growing like crazy, and AVS is already, a decent-sized player.
Right.
But as we've been talking about, the competition is intense.
Yeah. So what makes them think they can stand out, from all these other companies?
Good question.
Well, their investor presentation lays out this pretty bold vision, to become the leading provider of housing finance solutions,
Okay.
especially for people who've been kind of, shut out of traditional financial services.
Right.
It's ambitious,
It is ambitious, for sure.
but it's not just about having big dreams. It's
Yeah.
about actually making it happen.
Yeah, you got to walk the walk.
Right. And that's where I think their focus on technology and digital inclusion comes in.
Makes sense.
They want to use technology to reach more customers, especially in those underserved areas,
Yeah.
and to streamline their operations.
Right. Make things easier.
Yeah, make the whole process faster, easier, more transparent.
Basically make it so anyone can access these services.
Exactly. And that's a big deal in a place like India where more and more people are getting online.
Huge market.
Yeah, so that's a big opportunity for them.
But, we can't ignore the challenges.
Right. There are always challenges.
The Indian financial landscape is a tough one to navigate.
Oh, yeah. It's really competitive.
You've got big banks with tons of money,
Yeah.
other housing finance companies who want the same customers.
Right.
And then you've got these really agile fintech startups.
Yeah.
AVS has got to figure out how to deal with all of that.
Yeah, it's not going to be easy.
Not at all.
But, I think they do have a few advantages.
Okay. Like what?
Well, first off, they really understand this affordable housing market.
That's true.
They know their customers.
Uh,
They know their needs.
they've been doing this for a while.
Yeah, they know the challenges these customers are facing.
Right. Experience matters.
Exactly.
And you can't just buy that kind of knowledge.
Second, they've got a strong and experienced management team.
Yeah.
I mean, their CEO has been in the financial sector for over 25 years.
Wow.
They've proven that they can handle tough markets and consistently grow the business.
That's reassuring.
Yeah. And that kind of track record builds trust with investors and customers.
For sure.
And third, they've got a clear strategy.
Right.
It's backed by solid financial performance and a good funding model.
Yeah, they're not just chasing the latest trends.
Right. They're in it for the long haul.
They're building something sustainable.
Exactly.
Those are all great points, but I think their biggest advantage,
Okay.
and this is becoming more and more important these days, is their commitment to social impact.
Right. Their ESG stuff.
Exactly.
Yeah.
It's not just for show.
Yeah.
It's a core part of their business.
It seems like they really believe in creating value, not just for their shareholders,
Right.
but for everyone involved.
Customers, employees of the community.
Exactly. And that message, it really resonates with people.
Yeah, people want to support companies that share their values.
Right. Both consumers and investors are looking for that.
And it sets them apart
Yeah, for sure.
in a market where people really care about, a company's social and environmental impact.
So after looking at all of this, where do we stand?
That's the question, isn't it?
Does AAVS actually have what it takes
The million-dollar question.
to become a dominant player in this market?
Well, based on everything we've seen, I'd say they've got a solid foundation
Yeah.
and a pretty compelling vision.
Uh-huh.
They're putting their strategy into action. They're investing in technology,
Yeah.
and they're building a reputation for being socially responsible.
A good combination.
Yeah, it's a powerful mix, for sure.
But of course, like any business,
Yeah.
their success depends on their ability to adapt and innovate.
Yeah, the market's always changing.
Right. They got to stay flexible and stay true to their values.
Couldn't agree more. The financial world never stands still.
Nope.
So
Yep.
they need to be ready to move quickly and stay ahead of the game.
So as we wrap up this deep dive into AAVAS Financiers Ltd.,
Yeah.
we want to leave you with a thought.
Okay.
Think about those big trends that are shaping India's future.
Okay.
Rising incomes,
Hmm.
urbanization,
Right.
the growing need for affordable housing,
Yeah.
and the increasing focus on making sure everyone has access to financial services.
Financial inclusion.
Exactly.
So where do you think a company like AAVAS fits into all of that?
Yeah. What role can they play in creating, a better, more inclusive financial system?
We encourage you to keep exploring these questions on your own.
Yeah. Do your own deep dive.
See where it leads you.
Thanks for joining us.
It's been a pleasure.